Hello everyone, welcome to these sessions of a financial modeling. So today I'm going to make a financial model from a scratch. So first of all, I have to introduce for myself. I am a Shubham Kumar Gupta and today I'm going to make a financial model of a sole proprietorship from a scratch, where I have connected the different sheets. So I have a build I'm going to build this financial model from scratch in a Microsoft Excel. Now, a lot of people think that the financial modeling is only for a big companies or investment bankers, but that is not true. Even a small shop owner, a freelancer, or a small business person needs to understand their numbers, and that is exactly what we are going to do today. So, the business I have taken for the financial model is a general store called a Sunrise General Store, a sole proprietorship business. I have chosen this because it is a simple, relatable, and easy to understand. Everyone has visited general store, so there is no confusion about what the business does. Let me quick show you the structure of this model. Like I have taken the assumptions part. This is the assumption part. Through the assumption part only I am going to connect to all the sheets, and I will make a pnl account. So pnl account is connected with the cash flow, balance sheet, and dashboard, right? When we will put a number in the pnl account, automatically we will get the completed cash flow statement, balance sheet, and a dashboard. Dashboard says about the summary of all total numbers in at last. So um, here in a balance sheet also there are some assumptions like owner's equity is 1,50,000, bank loan is 60,000. These are all the assumptions like how much the credit payables, how much the soft furniture having a fixed assets of a sole proprietor. So now we have these assumptions. This assumption is very important. From this assumption only we are um, going to complete the financial model. Like as you can see, this model has a six sheet. I will explain one by one. Like cover sheets tell about the title page with a basic business info and assumptions. This is the most important sheets where all our inputs data is kept, and the P&L, the profit and loss statements month by month, cash flow showing how cash moves in and out every month, balance sheet, the financial position at a year end, and a dashboard, a summary of a key numbers. Now we will go through the each one in a detail. Let us start. So as I have said you that the assumption sheet is very important for the for this. So uh, I'm going to start with the PNL, where we have a revenue. As I said, the assumption sheet is the most important, as we will connect every item from the assumption sheet from this sheet, right? We will make a PNL account, and then PNL account is connected with a cash flow, balance sheet, dashboard. So we will get the cash flow and balance sheet as well. So we also we have assumptions like we have a loan repayment of 5,000 per month. We will see it later. Okay, now come to the profit and loss account. So revenue in assumption sheet, what we have taken, we have a daily customer, average basket size, and day in months. We are doing a per month calculations in financial modeling from January to December. So we have a daily customer of 48 in Feb, and 50 like in March 55. Also we have average basket of 320. It means what, like per customer is going to purchase 3 on an average of rupees 320 of a basket, right? And days in a month is 31 days in a month. 31 days, as we know the month working days, or per now coming to the cost of revenue. Cost of revenue, we have a 55%. Staff salaries is of will remain same for the whole year. Rent will also remain the same, which is fixed expenses. Electricity is 3,500, packaging and supplies is 2,000, marketing is 1,500, and miscellaneous expenses is 1,000. Also we have opening stock, closing target, bank loan outstanding, loan interest rate annual, and honest drawing per month. Income tax rate is 30%, so opening cash balance is 25,000. Now coming to the PNL, so how we will calculate the revenue? As earlier I have said, we will going to connect everything with the assumption sheet. So we will be, if why we are going to connect with everything with the assumption sheet? Because anything we will change here will get changes in the PNL account. Like if we want to change the number of a daily customer, like 48 to 55 or a 60, so our PNL and revenue amount will also get changed. Due to, we will attach a formula and connect the this sheet, from this sheet to assumption sheet. So now how to calculate revenue? Like we will put on the formula from here, like 48 into assumption basket into, like we will, if we will multiply this three number, like average basket size is 320 rupees 320, and daily customer is 48, and days in a month is 31. So we will get the revenue of a whole month. Now we will press the enter. See, we got the revenue. Now like this we will drag, I will drag this amount from here to here. Okay, here in top it's written the month, and this is the full year total. If we want to get a total of here, we will do a sum, bracket from here to here, bracket close. We'll get the total amount. Total amount, it means the sale of a total year. Now coming to the cost of goods sold. Cost of goods sold will be calculated like like we have a percentage in assumption sheet. How much is the cost of goods sold? Is 55% of a revenue. Okay, now we will put on formula equal to revenue multiplied by percentage. So we get the cost of goods sold. Again we will drag this from here to here. So we will get the total cost of goods sold. Here again we have to put a summation formula. We will sum the total cost of goods sold for a year. So we got the total cost of goods sold here. Now gross profit. We will subtract this from this. We'll get the gross profit. Again we will going to drag this from here to here. We'll get the gross profit. Gross profit margin is what we will divide from revenue, no, not revenue, gross profit divided by revenue. So we got the profit margin, like we have a 45% of a gross profit margin after subtracting the cost of goods sold. Now coming to the operating expenses. What are the operating expenses? Operating expenses are like expenses which are used to operate the business, which are also called as the indirect expenses for a business, like staff salaries, rent, electricity. As in assumption sheet we already looked that there are assumption given to, in a detail for the indirect expenses. Indirect expenses which are basically not related to the production part, but are to be called as the fixed expenses, which are to be going to incur in a per month, right? So again we will connect this from the assumption sheet. This assumption sheet staff salary. Enter. We got the staff salary. Here we will do the summation is equal to sum we got the staff salary of total. Now rent is equal to how much is the rent? $12. Now coming to the electricity, how much is the electricity? 3500. Again we will drag this from here to here. We'll get the total. We'll do a summation is equal to sum total packaging charge, packaging and supplies is equal to assumption. So why we are connecting this whole thing, like anything, even if we want to change in a part of expenses, any changes in the assumption sheet, we will get a change in the profit and loss account. So again we have to drag this. We will get here from no, I'm doing wrong. We will do the summation part here. Now marketing expenses equal to assumption is equal to sum miscellaneous will do the summation is equal to sum now coming to the interest on loan. So in assumption sheet, how much is the interest rate amount? So we have loan interest rate is annually 14%, and we have a bank loan amount outstanding 1,20,000. Okay, so coming to the PNL, how we will do, like we are doing a per month calculation. So again we will connect this from the here 1,20,000 into 14%, okay, divided by 12. So we will get the interest on loan 1400. Again we will see, no, this is not working. So again we will put on the formula divided by 12. denote the interest loan amount per month. Now we will do that here summation of how much is the interest total amount paid in a year. So we will doing a total, we got the total amount. Now total operating expenses, we have to do a summation. Take it. We want the total operating expenses, net profit before tax. So net profit before tax, we will subtract the gross profit margin, gross profit from the operating expenses. We will get the net profit before tax. So this is the net profit before tax. Have to do summation equal to sum bracket close, done. Now income tax is a 30%. So we are going to use assumption set PL. Now we will put here this formula for the calculation of income tax. So we got the income tax. We have taken a if formula by B16 greater than 0. B16 indicates the net profit before tax, which means that like if we have a profit more, we if we are earning a profit and that is the greater than 0, that's why we are putting a greater than 0, B16 greater than 0, then only we will get the tax amount. So we got here tax amount. We will simply drag it from here. Also we can see from the assumption sheet like the tax rate is 30%. The same we have put it here 30% from assumption sheet. Okay, so we got the tax amount. What we have to do is simply change this C16, it's taking C16. Let's put the formula here, is equal to if 0 comma again we will take this amount into, will go to the assumption sheet, how much is the tax rate, itna, comma 0 bracket close. So we got the equal to if bracket multiply here with this, and again we will go to the assumption sheet. We have 30% tax rate, comma 0 bracket close, enter, equal to, again what we are going to do is if comma is greater than 0 0 into assumption sheet, no, not, yeah, we have to go to the assumption sheet 30%, comma 0 bracket close. So like we can see here that the not net profit before tax is this much, and already we have a profit, so we have to pay tax. So instead of this formula also we can use net profit into, as it was taking so much of a time, that's why I'm doing like this. PNL this into going to the assumption sheet, and simply I am putting into to the 30% slab and pressing a enter, we will get the tax. Again this into assumption 30% is equal to assumption 30% is equal to into assumption 30% enter, is equal to into assumption 30% enter, is equal to summation 30% into is equal to into 30%. No, we will total this amount. We will get the total income tax paid in this year. Sum Now we will calculate the net profit after tax by subtracting net profit before tax is equal to minus, we'll get the net profit amount. We'll simply drag this from here to here and we will get the we will do the summation here. Now net profit margin, how much is the net profit margin? We will simply divide the net profit after tax by total revenue. So we got the net profit margin 25.7%. Simply drag from here to here, we will get the per month net profit margin. Also we can calculate the average net profit margin here by putting an average formula. Average from here to here, bracket close. So we have average net profit margin of a year is 27.3%. Now honest drawings was given in the assumption sheet, which was 15,000 per month. Simply add here, which is same for whole the year. No, we will do a summation here, summation from here to here. So we will get the total drawings of a year. We got the drawings. Now retained profit, retained profit is what, like after drawings we have a profit remaining which are to be again reinvested in the business for the growth of a business or and expansion of a business. So this is the net profit. We will subtract this from this, we will get the retained profit. So we get the retained profit we will calculate the return profit of a year. uh, so this is the P&L account completed. As I have said that all the sheets are to be connected from each other. So we got, while calculating a profit and loss account, we got the forecasted data of a cash flow, balance sheet, and we also completed the dashboard. See, so now I'm going to explain a cash flow. This is the cash flow from operations, where we got the P&L. We already put out the formula for from a sheet from the PL, which has to be calculated from. We have taken cash from operation from here. Operation expenses like staff salary, rent, electricity, packaging, and supplies, marketing, miscellaneous expense, interest on loan. So we got the cash flow here. Also, cost of goods sold paid were minus. Then we got the net operating cash flows. After this, we calculated the cash from financing. Just we are assuming we are paying a loan repayment of see, we are uh, doing a drawings of a 15,000 as we have seen from there, and also we are repaying a loan amount of a 5,000 per month, as we have outstanding loan of 120. So net financing cash flow is minus 20,000. Net cash movement, net cash movement, we have this much amount, uh, from where we got the net cash movement after adding net profit cash flows and uh, net financial net financial cash flows. So we get the net cash movement. Okay, in that we will add the opening cash balance. We will get the closing cash balance. This closing cash balance will become the opening of next month. This 1,27,410 become the opening of Feb month, that is 1,27,000. Again we will add this opening balance in the net cash movement. We will get the closing cash balance. Now again we got a total amount. Coming to the balance sheet, we have taken a cash and bank balances from here. Um, so from the cash flow 2129. Okay, so we will see the current assets, total current assets, fixed assets. We are assuming that a furniture, we have this much, and the liability, creditors payable, long term bank loan is remaining 6,000. As we said, like we are paying 5,000 per month, total 60,000 we are paying in a year. So we will have a outstanding balance of a 60,000 in a last month. That is we got here 60,000. See, total liability, we got this much. We have equity and we have assets. So we have a cash and a bank balances, closing stock, debtors, receivables. We get the total current assets. We have a fixed assets 80,000 less depreciation. We are calculating depreciation on a straight line method, that is 10%, 10% per year. So we will get the depreciation of 8,000, and then the equipment is for a 45,000 less depreciation is again here also a straight line method, and total fixed asset is 1 lakh 12,500. So we got the total of assets 23 lakh 7,281. Now we have a current liabilities and equity. Creditors payables is 18,000, where a tax payable is this much total. So now coming to the dashboard, this is the whole summary of it. We have a total revenue, total cost of goods sold, total profit, and total net profit, and closing cash. Closing cash, we have calculated, closing cash is this much. Okay, um, now we have total revenue, total cost of. Here is the summary of all total amount, where have already connected with each other's sheets. How I have completed the whole financial model of a Sunrise general store. See, this is the P&L, cash flow, balance sheet, completed balance sheet, dashboard. Okay. So today we learn like how to make a financial model from a scratch by connecting one sheet from another. So after calculating profit and loss, we will get the cash flow, balance sheet, and a dashboard amount. So this is for the today's my financial modeling. Mm, Financial modeling, whatever I have done from the scratch. Thank you for the today. Thank you.